Hey, what's up, guys? I'm just gonna make a raw video here, and I'm just gonna tell you straight, no edits, no nothing, right? So, this video is gonna be about most common trading mistakes. So, number one is changing strategy too quickly without learning the strategy fully or letting the probabilities play out. So, what I mean is, a lot of people, when they learn a strategy, they'll implement it for like maybe 1 week. And then when that week doesn't turn out to be a profit, they will completely give up on that strategy straight away. You know, maybe you experience negative variance where the strategy just pulled out, a string of losses instantly. Maybe you don't actually truly know the strategy. Maybe you had a rough guideline and you implemented it. Maybe you don't realize the nuances of, how the strategy works. Maybe you don't understand how the strategy performs in different market cycles. So maybe in a trending market, your strategy doesn't work. So that's why you're taking L's. Maybe it's a strategy for ranging markets. So understanding the strategy is vital to essentially finding a strategy that works well with you and actually implementing it to the point where it's actually fully effective. That is essentially the biggest trading mistake that majority of traders make. Every single beginner would have done it. I've done it. We've all been guilty of it, searching on YouTube, best trading strategy for Forex, and not letting the probabilities play out. Well, maybe strategy does work and you're implementing exactly how you should be, and the strategy just pulled out a negative on you for the week or the month. The strategy is supposed to do that. Maybe the strategy, has a 30% strike rate, but with the correct risk to reward ratio, it's actually profitable. You just took two trades, they were both L's, and you haven't let large numbers play out to where you get the winning trades and where it covers your losses. At that point, you just give up. Well, don't. Right, understand probabilities, how it works. And yeah, and also could have been a slow month for the market, for the strategy. It could have been anything, right? So if you find a strategy, first fully learn it, and after learning it and understanding how it works, implement it. But implement it for more than a week, more than a month, probably about 3 months minimum, I'd say. And then you can move on from there. Number two, another common trading mistake is that when traders feel like they are having trouble with trading, or they go through a rough patch, or they feel like there's a gap in the knowledge, or like the trading performance isn't what they hoped it'd be, they go out and learn more technical analysis. They already know the technical analysis, they just relearn it, right? They watch the same video to make sure they fully understand it. But they do already. But they think they don't because it's not reflecting on the charts. They're not making the money. So like, damn, I really don't know what I'm doing. So let's make sure I really know what I'm doing by rewatching the technical analysis video or learning more that I don't know of already. And in turn, neglecting the psychological aspect of trading. Now, that is a mistake that, especially the beginning parts of your trading career, you would have done, especially when you don't understand the importance of psychology, right? Like, you could be executing, doing your trading, right? Following the system, and you could be like, damn, I'm just losing after losing after losing after losing. Must be my strategy, right? Wrong, right? Have you ever stopped and paused for a second and looked at your trading journal? Hmm, I've taken 5 trades in the last 5 days. I've traded every single day. And if you understand, right, and if you understand your strategy and you know that on average it will bring about 2 trading opportunities every week. So that will be about 8 trading opportunities every month. And then you look at the monthly P&L and you're like, oh, I've taken 20 trades this month. I've taken a trade every single day. It's not that you don't know technicals. is that you're enforcing your technicals on the markets when you shouldn't. And that's you being impatient, not waiting for a setup, and in turn you resulting in a trade that's resulting in a loss that you think is the strategy's fault because you're implementing the strategy and you've taken the L, but actually you're just impatient. And if you truly were implementing strategy, you would have had a no trade day, no trade day, maybe a trade, a no trade day, a no trade day. And then after that, you would then, have a more true representation of how the strategy operates and performs. And yeah, it's not your technicals, guys. It's your psychology. So fix it up here before you fix it on the charts. So two more points left. So number three is not scheduling your trading times, right? Or not having a set session in your trading plan. So yeah, some people, they just wake up, trade, go to bed. Wake up, trade, go to bed. Maybe they wake up late and then they trade, then they go to bed. Maybe they don't trade at all that day. And then maybe they're like, oh, I'm really motivated. I'm going to wake up and trade the entire day. And then maybe they wake up the next day and trade 30 minutes and then go to bed. Well, not scheduling your trading times or not knowing when your trading period is a big mistake. You should know the times of the day that you should be on the charts. Yeah, you might be like, oh, okay, I am looking to look for this pattern, right? And yes, this pattern might occur midnight, Are you going to take it? Maybe not. You're going to be asleep, right? And then so that makes people just look at the charts all day. Look at the charts all day and waiting for this pattern, right? Maybe they don't look at the charts for some of the day and then they just turn up when their schedule's free up. So that maybe because they, have lunch with a friend and then they go do lunch with a friend and then they go trade in the evening. And then maybe sometimes they trade in the morning because they have something in the evening, they're going a night out or whatever. So then, the trade times are different. But it's fine, because in the time that they choose to trade, they're looking for this trade pattern. It will occur. And they can take it. It might work, it might not work. But understand your strategy as well, guys. There will be periods in the day where, this pattern will happen a little bit more often than others, right? So maybe, right, your trading window could just be just 30 minutes. Sometimes you can funnel it from a whole day down to 30 minutes, just when your trades appear. Sometimes it's a bit more broad. Sometimes it's like a whole session. So, I trade London Open, right? So about 8 to 10, right? That 2 hour window, that's where I trade. So yeah, understand your strategy to understand when it best performs at whatever time during the day, right? Because let me tell you, trading randomly will give you random results. And you don't want random results, you want consistency, right? You hear it from every trading influencer. Consistency. Trading consistently, right? Oh, one of my trading goals is consistently profitable. Consistently. That's a key word. So consistently show up at the same time every day, consistently, and you'll get consistent results, right? No random results. Thank you. Number four, not tracking any metrics in your trading. So if you don't have a trading journal, you're fucked. If you don't even use, my FX book to hook up your MetaTrader to track your trading, you're fucked. Like, what are you doing? Like you're not gonna remember every single trade. You're not gonna remember the entry price you entered at. You're not gonna remember if it was a long or a short. So have it written down somewhere and track your metrics, right? If you track your, time I open the trade, time to close the trade, when you look back, you might find a pattern, right? And that pattern might help you identify a trading window that you can, you know, pinpoint. It's just, it's a no-brainer, really. Like you can't improve what you don't measure. So measure your trading and improve on what needs working on, essentially. So like, again, you can see how many trades you've taken. I'm over trading. Bam. Right? You can see you can see my lot size. I'm over risking. Bam, fixed. It's that simple, guys. Just track your trades, right? Measure it, write it down in a trading journal, hook it up to, my FX book. That's what I do. I do it both. So I track it myself, and I have some other source, third party track it themselves as well. And then I glance over it, but like every now and then after every month, I'll look at it. I'll look at it and be like, this month I took 2 trades. Last month I took 4 trades. I think I'm doing better here. Or, oh, these last 2 trades didn't hit take profit. You know, I instead manually closed it at the end of my trading session. Why is this? Well, maybe because then you can track that, oh, the market's having low volume lately. And then you can adjust from there. And then you can also look at your TPs and see, oh, my average take profit is about 30 pips. So if I'm holding my trade to 50 pips, maybe I'm getting a bit greedy. Maybe I should set upper boundaries to where I'm holding my trades to. It's good to track, guys, just to let you know. So yeah, number fourth mistake was not tracking any metrics. Anyway, I hope you guys found something useful in this video. Maybe you realized you were being a fucking idiot. But anyway, I'll see you in whatever video I post next, I guess. Peace.